On today's episode, we are going to take a look at two growth stocks. The first one's going to be ZILLOW, the second one's going to be REDFIN, and this is another episode of Monday Matches. So on Monday Matches, what I do is I put two companies against each other and see which one I like better. And you might be like, Jose, how do you determine which one you look? Like, what type of points do you do? And throughout these episode series, I have developed this form of point system where I'm going to take a look at information like their revenue breakdown, their future growth, their historical growth, their balance sheet, valuation, cash flow margins. So there's a few different points that we're going to take a look at here. And if you are new to my channel, if you are a long-term investor, if you like to learn about growth stocks, make sure to hit that subscribe button and the thumbs up. It helps the small channel out so much. And to all my returning viewers, thank you again for all the support. I hope to bring value to you guys. And like always, make sure to hit the thumbs up. And if you guys ever want to get in contact with me, YouTube comments is the best place. I'm also very active on my Twitter. I'm very active on the Discord channel, which is free to anybody that wants to join. And I do have a weekly newsletter at josenaharo.com, so check it out. But remember, all this information that I give out is free, and none of this is advice. I am by no means a professional. All this should just be taken as an opinion, and make sure to talk to a financial advisor before doing any form of investing. So like I mentioned, today's episode is going to be ZILLOW versus REDFIN. And actually, let me know on the comments, who do you guys think is going to win today? Is it going to be ZILLOW? Is it going to be REDFIN? So let me know. Or are you guys even familiar with this market they're in? Both of them are in the real estate market, but trying to create new ways to pretty much update this old style market, right? Where right now, where for probably the past X amount of years, it's been the same way to sell houses. But now ZILLOW and REDFIN have come in and pretty much pretty much changing the whole game. And those are the types of businesses I look for. Ones that are coming in to make a big impact, to disturb the overall market and take market share from there. So I thought that today's episode is going to be pretty cool. All right, so the first point we're going to take a look at is market cap growth. And here we're just going to see which one has returned the most amount of return to investors in an X amount of time. Both of them have recently IPO'd, so to be fair with them, I'm only going to take a look at the past year. So the first one we're going to take a look at is ZILLOW, and ZILLOW has a market cap of about $15.2 billion. So with the market cap of $15.2 billion, right now, in the past year, it has returned about 44% to investors. Pretty amazing. I'm pretty sure that's way better than the overall market. But next, let's take a look at REDFIN. So REDFIN, in the past year, REDFIN is a much smaller company compared to ZILLOW. So where ZILLOW had a $15.2 billion market cap, REDFIN has a $4.15 billion market cap. So it's about 3.x times smaller than ZILLOW. So that to me tells me, right, it doesn't mean that REDFIN will ever grow to ZILLOW size, but it does now give me, hey, that there is the potential for REDFIN, there's potential for REDFIN to continue to grow. So REDFIN in the past year has returned 115% to investors. So congratulations to all you guys that have been long in REDFIN. The first point will obviously have to go to REDFIN on that market cap growth, but I do believe both of them have beaten the SPY, the overall market, in returns. And the SPY has only returned 15%, where ZILLOW did about 50% and REDFIN did 115%. So both of them have done amazing, have done amazing returns. All right, so the second point I'm going to take a look at is revenue breakdown. And here I want to see, hey, is all of their revenue, where is their revenue coming from? How is it broken down? And is it more of a one pony type show, or is it multiple ponies in this show? So the best way to pull that up is to go to their company's Investors Relations website and take a look at their most recent 10Q. So I do believe REDFIN, one of them did report earnings already. The other one has not. So to be fair, I'm taking a look at their March 31st, 2020 numbers. And you might be like, Jose, that's so long ago. For me, as a long-term investor, even quarters to some extent are pretty much noise to me. So I really want to taking a look at a quarter behind, not even a quarter behind, like not 3 months ago, can still show a lot about the business. So first, we're taking a look at REDFIN. So Redfin makes money from 4 segments. It makes money from real estate service, and I'll break this down in a bit. It makes money from properties, it makes money from others, and makes money from intercompany eliminations. Let's take a look at their total revenue. So their total revenue was somewhere around, their total revenue was about $190 million. Out of that 190 million, most of it comes from real estate services. Real estate services comes up with 102. Then we have properties. Properties make up 79. And let's just talk about properties. Properties is one of the easiest ones to understand. Redfin, they pretty much purchase houses and then they go out to sell them. And that's why we can see here, let me zoom in for you guys. For example, properties make up $79 million worth of revenue. They also cost about $79 million of cost of revenue. So you can see right now they are buying houses and are kind of running on the negative side with these houses. But this is a lot higher than they were same time last year. So same time last year, they had about $21 million in revenue from properties. Now they have 79. So they grew that about 4 times. Next, let me show you guys what the revenue means. So first they have what we called the brokerage revenue. So brokerage revenue includes offers and listing services where lead agents represent home buyers and home sellers, and they recognize a commission-based revenue. So brokerage revenue pretty much is the commissions they collect from their sales. Then they have partner revenues. Partner revenues consist of fees paid to us from partner agents or under other referral programs. So maybe it might not be a ZILLOW, a Redfin real estate agent that sells the house, but they might have used Redfin's platform, and then they get paid some form of fee for using that. We talked about properties revenue. Properties revenue is when they buy the house directly and then they sell it. They also have other revenue. So other revenue includes fees earned from mortgage origination services, title settlement service. So all the paperwork that goes through when you buy a house, you have to make sure your title is going well. You have to make sure your mortgage is set correctly. So all that is done through other revenues. And then they have intercompany eliminations. And this revenue is pretty much similar to the other revenues, primarily consists of services performed from our real estate services segment for our property segment. So this is kind of like the other revenue, but it is where the other revenue kind of works with the real estate, with the brokerage revenue. This intercompany elimination works with the properties revenue. So when Redfin wants to buy off a house from within their business, this intercompany elimination is that revenue that comes from there. All right, so now that we understand the revenue, we can see, right, a huge portion, we said 190 million is the total revenue that Redfin makes. Out of that whole, a huge portion comes from brokerage revenue. The other biggest one comes from properties, and just a very small portion comes from other makes up about 4 million, and intercompany revenue is actually down -1 million. All right, so if we really want to break down, the revenues pretty much comes from 2 segments. The first segment is the real estate service, where they either do some form of commission fees, or if they do some form of partner thing. And the second major part is the properties, where the properties is when they buy houses and sell them. Right now, the only one that's making money out of it is the real estate services. The property service is not doing that well at the moment. Now let's take a look at ZILLOW. And ZILLOW pretty much has the same amount, has the same revenue. It has what they called ZILLOW offers. And ZILLOW offers is pretty much what it's pretty much what Redfin has when they buy a house and then they sell it. So ZILLOW offers makes up about $769 million worth of revenue for ZILLOW, compared to 128 million a year ago. So one of the things we're going to see is a huge portion of the revenue jump has come from this segment alone, where ZILLOW is now buying more houses and they're selling those houses. Then we can take a look at, and we can see, right, unlike Redfin, remember Redfin from their houses sales, they weren't making any money. But over here we can see that ZILLOW is making money. Their cost of, to some extent, right, their cost of revenue is 732, a bit less, and the cost of revenue for Redfin was a lot higher, right? So here we have properties. Just the cost of revenue was higher than the revenue Redfin was collecting from properties, where that's not the case for ZILLOW. ZILLOW, even though all the other expenses make them at a loss, the cost of revenue is less than the revenue collected from ZILLOW offers. Then they have premier agents, others, and mortgages, and those pretty much are those same services that Redfin has, where it has to do with opening mortgages, doing the titles, commission fees, and any other type of services like this. So they pretty much have the same similar revenue breakdown. So here I'm going to give a point to both Redfin and ZILLOW. But one thing you do see is that ZILLOW, compared to the same time last year, they started buying a lot more houses, and that's one of the major reasons why ZILLOW's revenue is up a lot higher compared to Redfin's. But remember, we have to take account that this part of the segment of revenue usually has very, very low margins. All right, so here in revenue breakdown, we're gonna give a point to ZILLOW and Redfin. All right, so now I wanna take a look at future growth. So at future growth, what I'm seeing is I wanna take a look at their expected earning growth. I wanna take a look at their expected revenue growth. And I wanna see, are they beating the market? Are they beating the industry? So first, let's take a look at ZILLOW. So ZILLOW, the revenue growth is expected to be 27.7% per year on average for the next 3 to 5 years. And that's higher than the industry, which is 15.6, and it's higher than the market, which is 9.3. Then if we take a look at annual future growth forecast, ZILLOW is expected to grow its earnings for 38.5% on average annually for the next 3 to 5 years, when the industry is supposed to be 20.3 and the market is expected to be 22.3. So ZILLOW is going to beat the market in both revenue growth and earnings growth in the next 3 to 5 years. Now let's take a look at Redfin. Redfin seems to do a lot in earnings growth, is expected to do a lot better. So Redfin is expected to grow its revenue growth 23.1% on average per year for the next 3 to 5 years, where the industry is 8.6 and the market is 9.3. And they are expecting to grow earnings at 59.9% per year on average per year for the next 3 to 5 years, where the industry is 24.7 and the market is 22.3. So both of them are doing good, but let's take a look at these points right here. So both ZILLOW and Redfin are growing revenue faster than the market. Both Redfin and ZILLOW have high growth. They're both growing faster than 20% a year. But Redfin seems to be beating ZILLOW in the certain aspect of earnings. So ZILLOW is forecasted to remain unprofitable over the next 3 years. Redfin is forecasted to become profitable over the next 3 years and is growing at a faster rate than both the market and the saving rate. So for that reason, I'm going to have to give the point here to Redfin, because one, we both saw that they were growing their revenue faster in terms of percentage wise than the market and the industry, as well as earnings per share. But ZILLOW is still not expected to be profitable in the next 3 years where Redfin is. Next, let's take a look at revenue growth. And revenue growth is taking a look at past numerical growth. And after that, we're going to take a look at margins growth. All right, so ZILLOW in 2019 compared to 2018, it grew its revenue 105%. In 2018 compared to 2017, it grew 24%. In 2017 compared to 2016, it grew 27%. So we can see this is definitely a growth revenue. And one of the major reasons we saw that revenue growth dramatically this 2019 was because they started buying more properties, and with more properties, they start selling. They had those higher revenues, but we have to keep in mind, right, that revenue segment has very, very low profitable margins, or even very low margins. So I'm sure we're going to see a tick down in margins when we take a look at. Now, if we take a look at Redfin, they grew 60% in 2019. They grew 32% in 2018, and they grew 38.4% in 2017. So again, both of them are really fast growers. But to me, I'm going to have to give this point to ZILLOW because they, on average, in the past 3 years, they have grown faster. But again, we have to remember, keep in mind why they are growing faster. But still, revenue growth has to go to ZILLOW here. So next, let's take a look at margins. So let's take a look at annual margins for both of them. So the first thing I'm taking a look here at ZILLOW is in 2019, their gross margins took a big drop. Before, they were about 88.5%. Then they dropped to about 47.8%. And remember, a lot of people might be like, wow, this is crazy. This is a scary thing. Why would this happen? And I might be sounding like a broken record, but remember, they did just really start increasing that property segment, which is a huge portion of their revenue. And it's also one that does very low margins. So that's why we see a huge hit in there. And again, we can see they're both, we can see ZILLOW is still, it's still unprofitable, and it's going to be unprofitable for at least the next 4 years. Next, let's take a look at REDFIN. REDFIN is kind of telling us the same story. First, we can see their gross margins. Gross margins for REDFINs are actually a lot less than ZILLOW's margins. Gross margins for REDFIN are 18.5%. Well, remember, for ZILLOW, they were still about 47.8 at the end of 2019. So that's something to really keep an eye out. And we can see, right, it is decreasing over time. And it is for that similar reason that, hey, properties is becoming such a huge portion of these companies' revenue. And eventually, I do feel like these gross margins are going to continue to dip for that reason. Very similar to ZILLOW, they are pretty unprofitable right now. Here, to be honest, both of them are not showing any really good reason why I would give a point to one or the other. So for that reason, I'm going to give a margins growth to both ZILLOW and REDFIN right now. All right, next, let's take a look at cash flow margins. All right, so next, let's take a look at this cash flow margins. So the first thing I'm seeing is here in REDFIN. So I'm looking at ZILLOW, sorry, not REDFIN, ZILLOW. So the one thing I'm not liking is this company's revenue is increasing, but there was a portion when that revenue was increasing, but their net cash flow from operations was decreasing. This doesn't necessarily mean a bad thing, but normally you want this to go up. If it goes up, that's usually a good thing for many reasons. If it goes down, it's not necessarily a bad thing. They could be using that money to be increasing their overall market and advertising and all that they're spending obviously more money that they're collecting. So right now, operating cash flow margins trailing 12 months for ZILLOW were negative 4.82%. REDFIN just reported earnings, so it wouldn't be fair for me to take a look at REDFIN's most recent margins because ZILLOW has not updated there. But taking a look at March's, they're negative 12.04%. And they pretty much, if we take a look at the trend line, it's similar to ZILLOW, where revenue continued to go up. They decreased their operating cash flow margins and then started to do an uptick. Let's take a look at REDFIN, right? It increased revenue. They started to go down and then they went back on an uptick. So they're both showing the same market results. Again, here, no one is really telling me which one is better. So for here, I'm going to have to give a point to both of them on cash flow margins. Next, I want to take a look at balance sheet. So in the balance sheet, what I'm really interested on is to make sure they have plenty of cash, right? Both of these are companies that right now are not making money. They're not profitable. So for them to not be profitable, I need to make sure they have plenty of cash at hand to continue to survive as they remain unprofitable. So let's start off with ZILLOW. So ZILLOW right now has about $1.6 billion in cash, and they have about $1 billion in current investments as of March 31st. So they have about $2.6 billion of quick cash, and they have current debt of about $500 million and non-current debt of about $1.8 million. So that's about $2.3 billion of total debt. So if they pay off, they have enough cash to pay off their total debt, but they probably would only have about $300 million if they did that. Now let's take a look at REDFIN. And REDFIN, like I said, they just reported earnings. So I want to take a look at their, when I'm comparing the same time as ZILLOW. So Redfin in March of 31st, they had about $120 million of current investments, and they have about $230 million of cash. So we can see this is a whole different value compared to ZILLOW. ZILLOW seems to be the monster right now. They have a lot more cash, but let's take a look at that ratio. That's about 350 million dollars. And this company has about 178 non-current and about $63 million of current debt. So you know what? It's actually pretty similar in terms of ratio. I do believe Redfin has better ratios, but both of them have enough quick cash to pretty much pay off their non-current debt and to pay off their current debt, which tells me this is a company that'll be able to survive until they remain more profitable. So here I'm actually gonna have to give another point to both Redfin and ZILLOW. So is it almost a tie? ZILLOW right now has 5 points. Redfin has 6 points. So next I'm gonna go with valuation. So for me to do valuation, I've actually created this Excel sheet that I use. And when I'm taking a look at valuation, I wanna take a look at future valuation. And when I'm taking a look at future valuation, again, this is a Excel sheet I created. If you guys want to check it out, make sure to go to josenajarro.com. I actually have a link downloaded and kind of explain how I use it there. Again, this doesn't tell me if it's a good buy compared to the overall market. It's just telling me how do they compare against each other. And here I'm taking a look at things like their expected revenue growth, their forward EV to sales ratio, their future profit margins, their future estimated revenue growth, their future earnings. So there's a lot of estimations based on a lot of different metrics. And this is the valuation I personally tend to go to. So right now it's telling me in this valuation method that ZILLOW is a bit cheaper than Redfin right now. And to put it in perspective, ZILLOW at the moment if I was paying $1 for ZILLOW, I would be paying $1.44 for Redfin. And that to me is actually, it's not that big of a gap. It's about a 44%. You're paying about 44% more for Redfin than for ZILLOW. If we take a look at it like that, it seems like a lot. But remember, Redfin is one that's has a smaller cap, so it has way more room to grow compared to ZILLOW in terms of market cap right now. But at the same time, ZILLOW can still continue to grow and be a beast. So in terms of valuation, I see that ZILLOW is the cheapest. So for that reason, I'm going to have to give a point to ZILLOW. So right now, it actually seems to be a tie right now. And the final one is going to be on my thoughts. So first, the overall market of real estate. I do believe that both of them are in a strong market. Right, they're both in the same market, and this market of real estate growth is real estate sales, and one where you're trying to remove a lot of the middlemen. When you're trying to do a lot of things online, is a great way to go. I think it's a market that's going to continue to grow. So I see future growth in the market. I honestly did not see much difference between any of the two. We saw they pretty much have the same revenue breakdown. They have pretty much the same type of margins trend lines happening. The only thing I really like about Redfin right now is that they have that future growth, and they are expected to grow earnings at a faster level than ZILLOW, right? They are expected to be profitable in the next 3 years, where ZILLOW is not. And even though that point was already given to Redfin, the reason I'm going to give the point to Redfin is because ZILLOW is already a company which has way more sales than Redfin, and for them to not be able to be profitable yet is kind of a daunting, something that's giving me a daunting feeling, where I can see that Redfin, wow, they're gonna be making money with even less sales than ZILLOW. So when they get to if they ever get to the market growth, the market revenue that ZILLOW has, the amount of money that can be coming from there could be very, very strong. So here I'm gonna have to give my final points to Redfin, and Redfin takes the win on this one. But again, remember, just because one of them is a winner does not mean that the other is a bad investment. I do believe both of them kind of have very similar investment styles, and the way I'm gonna move about this is both. I don't know if you guys have seen my portfolio. I did a video previously on this one, on my overall investment portfolio. And my investment portfolio has about 50 stocks. And yes, I know, I'm pretty sure I'm gonna get comments here that tell me, hey, Jose, you're way too over diversified. You are not gonna beat the market. Well, if you guys have that kind of mentality, I would definitely recommend you checking out my video, and I can prove you wrong that I am not over diversified. I invest in certain markets that I believe are the strong growth markets, and within those markets, I invest in companies that will follow the trend with that market. So right now, my returns have been pretty amazing. And again, right, I just get tired of hearing that, hey, Jose, you're over diversified. I don't know why. There's no proper way to invest in this portfolio. If there was a magic number of portfolios of positions one should have in a portfolio, there would be one and everybody would be following that. But that's not the case. It's all different for every investor. And I think every investor should learn that. And that's something that I've learned through my 6-7 years of in the market. It's me continuing to learn what I thought I knew and how I'm continuing to evolve as an investor. So how I am going to go and purchase Redfin. I might even go and purchase ZILLOW. But to me, it's different to how other investors do it, right? I don't have unlimited funds. Most of my money is always in the market. So I only put about like $500, $600 on a week on the market. So those $500 and $600 are way smaller, are very small portions compared to my overall market portfolio. So when I enter a position, I probably only enter about 1%, if that, of my portfolio. And then as I continue on a weekly basis, I continue to increase my portfolio position every week on that portfolio. Eventually, it might be like 2-3%. Redfin or ZILLOW, if I were to enter them, they wouldn't be more than 3% of my portfolio. I can tell you that. But just because they wouldn't be 3% of my portfolio, does that mean that they can be great winners, right? Imagine 3% of your portfolio, and if they go 10 times, I am a long-term investor, so they can possibly become 10 times winners. A 10-bagger. A 10-bagger originally starts as a 3%, can end up becoming a 30% of your portfolio. And that to me is the amazingness of small positions and me having multiple positions in markets I am bullish on. So that's how I'm gonna go. I'm gonna go. I did purchase Redfin. I bought like, I want to say like 0.2% of my portfolio, if that, just for an entry position. And I was waiting for this video to see if I should go more into Redfin or if I should sell that and go into ZILLOW. And to me, I'm going to continue to increase my position in Redfin. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up. Take care, guys. Have a good night and see you next time.